All right, I've got some exciting news for stock market investors. I'm upgrading Lululemon stock to a buy. Up until this point, Lululemon stock I've had rated as a hold in 2025. I told investors not to buy this business just yet because of the headwinds it was facing, and then the potential risk from tariffs I thought was too high for the company at the valuations near $400 a share where it started 2025. But now at $239 a share, I'm upgrading Lululemon stock to a buy. And in this video, I'll describe some of the reasons why I'm upgrading the business. I'll share with you my proprietary discounted cash flow valuation model, which demonstrates my calculation on how undervalued I believe this business is. And then I'll share with you the forward price to earnings ratio, which is near the lowest level it's been for this business. And I'll discuss some of the implications of tariffs and competitive dynamics that has Lululemon as an attractive investment according to my analysis.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So like I shared with you at the beginning of the video, Lululemon stock is now down over 37% year to date in 2025. I expected the business would be tough to begin 2025. That's one of the reasons why I told investors not to buy just yet. It was facing some macroeconomic headwinds as well as geopolitical headwinds. And to pay a $400 price for that business coming into 2025, I said it was too much for this business. And then around April, I touched up on this business again. On April 20th, 2025, I reiterated that hold rating on Lululemon, and I told investors that I didn't think the stock was a buy just yet. I thought the headwinds were increased as a result of those new tariffs announced by President Donald Trump in early April. So I told investors to wait off, don't buy the business just yet. But today, July 10th, 2025, I think is the right moment to start accumulating a position in Lululemon stock. The business is gaining competitive advantage as a result of its innovative product category. It's gaining market share in some key markets against rivals like Nike. In fact, Lululemon is forecasting revenue growth of almost double digits in the next fiscal year, whereas Nike's revenue in its most recently completed year was down double digits. So Lululemon gaining market share in areas outside of the United States, especially Lululemon is gaining significant market share. In China, in particular, Lululemon is expecting 20% revenue growth, where Nike demonstrated over double digits revenue declines. Lululemon is opening into new markets with both the franchise model and company-owned model in new categories, new countries. So I'm liking its growth prospects. In the United States, the company's revenue is under pressure. The cost of goods sold is under pressure as a result of increasing tariffs. But as you might already know, Lululemon has excellent profit margins to sustain those higher costs and pass along some of those higher costs onto customers. This chart here from fiscal.ai, which I use every day, it helps me save so much time in my financial analysis. There's a link in the description if you're interested in doing some analysis using their website. You can see Lululemon's revenue has increased by more than 5x in the last decade, up from 2.1 billion to over 10 billion. That's good for a compounded annual growth rate of over 19% in that time. And its operating income have increased by more than that, rising from 400 million in 2015 up to 2.5 billion in the most recent trailing 12-month period. Looking ahead, I said management forecasting revenue growth of almost 10%, 8 to 9% was the forecast looking ahead. Most of that growth coming from outside the United States. In the United States, revenue barely budged higher in the most recent quarter. And one note, as I mentioned, I was going to talk about competitive dynamics. I like where the industry is heading now. Nike, one of the biggest players in this, in similar categories where Lululemon is competing, including in athleisure, in training, and in running. Lululemon is competing against Nike in those categories, as well as in tennis and yoga and other areas. Nike, in their most recent few quarters, I like what I've heard from the management in terms of what it's going to do to the competitive dynamics in the industry. Nike's management team said that they're staying away from promotions and incentives now. After they clear through some of their older inventory, they're going to focus on taking the brand to a more premium category. So, no more discounts, incentives, and promotions. They want to sell products at full price. And that's good news for the industry overall and Lululemon specifically, because that means when consumers go to compare prices, they go to comparison shop, they're going to see Nike's product prices closer to Lululemon's, right? Lululemon is the super premium category, the most expensive across various product categories. And now when consumers compare Lululemon to Nike, the price difference may not be as large. And so consumers will say, oh, it's not that much more expensive than Nike, or it's not that much more expensive than some other brand. And so Lululemon's products can be relatively more attractive now as the industry sheds some of that promotionary spending and incentivized categories. So that's good news. I like to see industries removing price discounts, removing price competition. If you read my book, The 6-Step Investing Framework that I use to evaluate companies, one of the 6 steps I look at is competition. And one of the things I despise to see, one of the things I try to avoid is industries facing steep price competition. The electric vehicle industry in China is one example of steep price competition. And as you probably know, I've been avoiding the electric vehicle industry for several years now, and that's worked out really well for me. So many disasters in that industry, so many bankruptcies, so many companies down over 95%. And so that's helped me avoid a lot of disasters, is avoiding those types of competitive dynamics. And this category is now moving in the opposite direction, with Nike saying that, you know what, we're going to a more premium pricing model. And as one of the industry leaders, that's good news. That leads to followers saying, oh, we like that, and we'll follow that strategy as well. So looking at valuation, I updated my model for Lululemon today, and the intrinsic value per share I calculated is $278 per share. The current market price is $239 per share. So it looks meaningfully undervalued when measuring by my forward price to when measuring by my proprietary discounted cash flow model. And then again, when I go to fiscal.ai and I retrieve the company's forward price to earnings ratio, it's trading at a forward PE of 16, the lowest it's been since 2022. So it looks meaningfully undervalued using the forward price to earnings ratio. Of course, as I've been talking about, headwinds and risks are higher as a result of tariffs. The imports to the United States will be under pressure for Lululemon, to be sure. But now, with the increase in its international business and the growth in its international business, it can shift some of that manufacturing and sell to those categories outside the United States. And then with its very large profit margins, it can afford to absorb some of the higher cost of goods sold. And also with its premium brand positioning, it can exercise some pricing power, given that the industry is moving to more premiumization instead of a more incentive based sales structure. So I like this business right now. I'm upgrading Lululemon stock to a buy today. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.